So this is the distribution for today. Let's talk about the macros. This article is on India's loan disbursement and foreign grant since the pandemic. And we can see how Bhutan has been the largest beneficiary of foreign grants, followed by Nepal and Maldives. And even during this conflict, we still see Maldives as a very high number. A good relationship kind of leads to economic ties, and then which can lead to some infra spending, defense spending, and medical tourism from those countries. And generally, such geopolitical action kind of is present to restrict our most belligerent neighbor, China, from entering into these spaces. This article is on Indian exporters who are hopeful to gain from the US China tariff war. Now, last week or this week, US President announced stiff duties on aluminium, semiconductors, electric vehicles, batteries, critical minerals, solar cells, and very important ship to shore cranes and medical products from China. And this would probably impact about 18 billion of the total 420 billion of exports from China to US. This is marginal, but maybe China also does some uh, trade war, and this would be a benefit for India because businesses will like to de-risk their supply chain. Plays maybe for aluminium is Hindalco, Vedanta, Nalco. Already we see the metal sector is in quite boom, and there could be more capacities out of China and into countries such as Vietnam, Thailand, and Mexico. Impact of ship to shore crane, where non-Chinese player benefit, and also very interesting is to see how does the EV and the solar cell price change, because now US might import from India, or they might produce these things in their country. Another interesting area is graphite, where China has already weaponized it, and let's see how it works out. This is a very interesting article which talks about India's saving rates. And as we can see from the chart, the saving rate has been decreasing, which is a percentage of the gross domestic product, and they have been consistently decreasing. And we can see that the financial liabilities of households have increased by almost 1.7% from 2008-9, telling that people are taking a lot of leverage. And we don't know. I mean, the author also doesn't clearly know whether it's a negative trend. Are people borrowing money and consuming, or is it that people have a better place to put their capital and thus thereby grow the economy? However, the author is sure that for a country which is capital starved, flow of capital into banks is a good thing. There will also be some regulatory measure to improve the saving rate. The next question is, why are households under such liability? And maybe this has to do with COVID and other disruptions. Has the cash flow gone towards paying loan and interest since COVID? So loans taken during COVID, are people still paying that, especially on the lower bottom part of the pyramid? Then is premiumization trend, is it led by debt? And are there any change of consumption pattern that people are not saving but consuming more and more? Now there's an interesting article of NBFC. He talks about retail unsecured lending, and this might be a risk of on co-lending. So basically, the banks or the NBFCs are targeting one specific customer, that is retail unsecured, where you have very high margins. The increased cost of compliance probably will increase for the NBFCs. A lot of NBFCs have been talking about using AI ML model to underwrite, such as Hugro Capital. So they might also come under scrutiny. Their models might come under scrutiny. Also, he talks about liquidity risk, where due to NPAs, there might be a asset versus liability mismatch, and companies are not employing enough people to monitor this thing. There is some compliance cost risk, because banks would probably increase audits. Also, there are very limited source of funding, or NBFCs have to raise fund and then give it as loan. So there are very little sources of funding. There might be equity dilution, NCDs, and bank lending, but most likely bank lending will start to taper for these high risk assets. In this article, again, just that the pained NBFCs are talking with the finance ministry and RBI. Also regarding project financing, here there is some provisioning set. So now some more interesting updates. We see that there is some auction which would go on very soon. So almost 96,320 crore. But there is, the demand is not very strong. Geo has the highest eligibility point, followed by Airtel, followed by VI. The net worth of Geo is also very large. Probably post election, we'll see some price increase. Next article, silver. So, silver is an industrial metal. Silver is also a storehouse of value. The current rally is most likely speculative in nature. And the industries which require silver are EVs, photovoltaics. Probably the most important reason why silver is going through an uptick, probably the most important reason silver is in an uptick is because of the slowing US inflation. And there was an expectation of rate cut by September, which most likely will not happen by September. And then that's why getting into speculative things. We can also see how gold, silver, and copper have given return year on year. Now, again, article on quick commerce where they're making a pivot. So they're trying to be Amazon, but on quick commerce. But this article talks about the challenges and why this might not work. Good thing is for these guys to supply, they can't do it on two wheelers. They need to get to three wheelers or four wheelers. So that is also another interesting space. Article on rooftop scheme where the government give tenders so that companies can apply for the tender and provide this thing, but they would have verified vendors, and governments will probably give a subsidy, but the subsidy amount doesn't change. Players are Crompton Greaves, Kirloskar Brothers, Shakti Pump. It is to be seen whose distribution network is better in these things, and this is about Shakti Pump. This article talks about the two-wheeler segment, and there is an expected recovery turn with two-wheeler comeback, and how it has changed in the second half. This article talks about the ER&D growth in the country, and which would come from US, Germany, and Japan. So this is said by LTTS CEO. So interesting is ER&D jobs migration to India is a very high value addition work, and India has low cost, high skilled workforce. I mean low cost compared to Europe. The effect of higher ER&D work is better consumption, domestic capital formation in urban India, and I mean that goes towards real estate and then consumption in terms of manufacturing, vehicles, premiumization, etc. And companies working in plant engineering, automobile sector, semiconductors, they'll all get benefited because of the lower cost arbitrage. So Cyient, Moltech, these guys definitely might benefit. I'm also drawing a two-wheeler ecosystem with players, and I'll come back to it later with the names of the companies. Now, more Indians are traveling abroad than ever before. So this is a report from Mastercard, and just trying to see who are the players in the lounge network, travel agent, payments, transportation, hotel chain, tech stack. This article talks about Mahindra and Mahindra's profit, and we can see how the SUV sales probably has gone 20% year on year, and they are also coming up with newer SUV. So what is interesting is SUV related powertrain ancillaries, the diesel version of it, the emission system like Sharda Motors, which are relatively cheap. Tractor sales are flat. If there is good monsoon, tractor sales most likely will pick up. Some companies which might benefit from the trend is probably Lumax, Shriram Pistons, Divgi, and also maybe a Pricol, but I mean, people should study about. This article talks about how air traffic in India is rising, and I think one clear beneficiary is Indigo, and also to some extent companies like RateGain. There is some US generic drug shortage in US, and we can see that Alembic Pharma's US business is growing. They will in future get into injectables, ophthalmic, oncology, inhalation, and dermatology products, and they will do some debottlenecking capex, and they're also doing some R&D work. And just an article, floating cities as a solution to rising sea level, and maybe some infra plays, somebody who's making weirs and water logging. Or this article talks about the tight liquidity and SBI rate hikes to increase the deposits. I mean, they have increased it by 0.25 to 0.5% based on the capital amount, and this increase might squeeze the net interest margins further. So this is a challenge for banks like HDFC, Kotak, and ICICI, who has not fully transmitted the repo rate thing to the end consumer. This article talks about how RBI might consider that there would be a 5 to 6% earmarked for exports in the priority sector lending because of the credit crunch, because of longer travel times. So almost 40 to 45 days are increasing, and also the cost, so that there is cost competitiveness versus the receiving country. And yeah, so this is probably good for co-lending. companies who are giving loans to export-based MSMEs, they can benefit out of. Just an article on Mankind Pharma keeping war chest ready for acquisition. Again, OTC business. Zoho plans some 700 million foray into chip making. I mean, interesting would be who are the EPC players, the chemicals, the automation brand, because chip industry needs a lot of these players. Vedanta is raising around 8,500 crore. To pay dividend. Let's see. Hindustan Zinc reaches out to government with a new demerger plan. Initially, they wanted to break the zinc, lead, and silver. Now they're combining, keeping zinc and lead together, and another subsidiary for silver. The way the price of the stock is moving, maybe this might actually be acceptable. So copper has a widespread usage in industry, and the demand spike is due to EV and renewable transitions. So copper is almost $10,395 a ton. Gems and jewelry is it's weak. Diamond industry is showing weakness. Gold jewelry export is up, but due to high prices, demand might be poor. So this might be poor for jewelers, especially when the upcoming marriage season comes in. Gum guar export down to 12% to 541 million. There is Indian glycols, but that's a chore company, so we don't know. And then summer rains renews hope of higher natural rubber. So probably we will have better prices. I mean, currently the prices are 180 and might come down to 150. So some of the automotive company who uses rubber as a key raw material, like Seat, Apollo, Tinner Rubber, they might benefit from margin expansion. And then PC market just grew by 2.6%. And there is this concern about IT and ITES procurement. So let's see, I mean, if EMS companies take up the mantle. That's all for today. Thank you.